Hello, dear student. I welcome you again to Social Studies in Standard 8. Remember, in Social Studies, we are looking at the issues that affect our society. Basically, that's Social Studies. So, in Social Studies, as I've been talking to you, as I've been telling you, we have a lot or a number of units to cover. Just as a reminder, let me take you through again. Here are the topics or the units, 26 units. As you can see, we started on top there, solar system going down, down, down. We're about to finish this part. When we finish this part, that's when we go this part. All these ones, they are the work that you are supposed to cover in Standard 8. So today we are in unit number 12, insurance here. So after this, then we finish. So this is the work in Standard 8. So the work for Standard 8 is for your social studies. And for agriculture is there, for expressive arts, PK, science, mathematics, yeah, they are all there. So as you can see, there is no time to waste. You need to stay focused always and do this work all the time. And these videos, they are there to assist you. Basically, they are there to assist you. When you go to class, you come home, maybe you can revise those things and see how you can do. Sometimes you missed a class, then you can get a video and play and see what your friends covered. Then you are well protected there. So let us move on. As I said, today we are on unit number 12. Unit number 12, we are looking at the insurance. Insurance. Not insurance. No. Insurance. It's insurance. So, insurance. So, we are going to look at insurance. What is it? So, we are going to define insurance and if there are types of insurance, the importance of insurance. We are going to look at a number of issues here. So I ask you to be there. Pay attention. Pay attention. Pay much attention to this. Now let's move on about the insurance. Now, in insurance, we talk about the things that concern you, protecting your life, protecting your property, protecting your things that can assist you in a day-to-day life. So that's what we are going to look at. So as you know, life has some misfortunes, such as loss of property or life due to unforeseen circumstances. In life, if you can see, you can think about, there are people who have died in accidents. And as you know, an accident doesn't say or doesn't send a message that on such a day you are going to have an accident. Nothing like that. It just happened. Sometimes it's an accident whereby the house catches fire. Then all the properties they are destroyed by the fire. So those are the things that happen in life. So in order to protect themselves from such risks, individuals or institutions take insurance policies. So in order to protect themselves, in order to protect ourselves from such unforeseen circumstances, the things that you don't expect, then you take insurance policies. So there then we have come across the word insurance. So we take insurance policies to protect against our properties, our lives, and many other things. Now, when you talk of insurance, therefore, insurance is a system whereby an individual or institution gets safeguarded against the risks. An insurance is a system where an individual or institution gets safeguarded against the risks. What are the risks that we're talking about? We're talking about the risk of the accidents or any other unforeseen circumstances, the things that you don't expect. Therefore, a system whereby an individual or a person or an institution gets safeguarded to be safeguarded, is to be protected against the risks or the things that will come on you unexpected. So in that way, you are getting a protection or an insurance. Therefore, the person or institution pays monthly premiums to an insurance company. So what happens is that in insurance, there is insurance company or insurance institution, whereby an individual therefore pays monthly contribution to say, I am paying this amount so that I should protect myself, I should be protected whenever maybe an accident happens. Therefore, this money will come to me and assist me at that time. So that is the money that is called the premiums. Premiums. So the premiums are the money that are paid as a protection of your life, of your property, to an insurance company. I guess you get that. I understand you are following, and we are together on that. So we have looked at the term insurance, and now we have added another term, premium. So premium is the contribution or the money, the monthly contribution to protect yourself. So where do you contribute? To the insurance company, the insurance company. So this allows individuals or institutions to be compensated in the event of the insured risk. So an individual is compensated. A compensation is the payment for the damage that has been done. So who is paying you? In other words, you are paying yourself because you kept your money as a protection to the insurance company. Now, after the risk or uncertainty happens, then that insurance company says, we have been keeping this money for you maybe for 5 years. Now, because of that, we are going to add some more money and give it to you because now you have this accident. You have this unforeseen circumstance. So here is what we call the insurance. Now, I guess you have understood what the insurance company or what the term insurance means. The insurance company, the insurance premium. Now you are able to define or explain these things. Having looked at that, it's time now we see the types. What are the types of insurance policies? Number one, we have the life insurance policy. Then we have the life endowment insurance policy. Then also we have medical insurance policy. And the next one is the property insurance policy. Here we have looked at 4. So these 4 insurance policies, they are there in their categories. So life insurance policy, life endowment insurance policy, then medical insurance policy, then property insurance policy. So these 4, they are the major types of insurance. So let us look at each and every insurance on its own. What is it? What is it all about? To begin with, the life insurance policy. This policy is a contract between an owner and a life insurance company. It is a policy between an individual and a life insurance company. A contract involves signing. That's why it's a contract, to say, okay, we are going to do this, you are going to do this. So there is that agreement. A contract is like an agreement between an individual and the insurance policy, the insurance company. So that one is called the life insurance policy. In this one, the policy promises the payment of a stated amount of money in the event of death of the insured person. So in the life insurance policy, there is the protection of yourself or a certain individual to say, all right, we are going to keep this money. In case I die, this money is going to protect maybe my family, give it to my family. So something like that. So that is life insurance policy. So it's a policy, it's a money that you contribute to the insurance company so that you ensure, you protect your life or the life of somebody after the death of someone. So the individual dies, then the money that he was keeping is given to the responsible people. Maybe the children, that time maybe they need school fees, then that money goes to school fee for school fees. I guess you understand it better, the life insurance policy and what it means. Let us go to the second one, which is endowment life insurance policy. Endowment life insurance policy. What is it? This one, it means saving of money. This means is a means of saving money. So this part, it's whereby you just save money. So how do you save? You protect it again into the insurance company. You give the insurance company to say, right, get this money, keep this money for me. I'll get it maybe after 10 years or after 5 years. So policyholders may use endowment policy to finance education of their children. So the importance of this endowment life insurance policy is that you can be keeping bit by bit premiums. Remember premiums? The contribution, monthly contribution, that is a premium. So you pay the premiums. Therefore, sometimes you agree for 10 years. So that at that time, after 10 years, then you find that the money is huge amount. By that time, maybe your children, they need school fees. Then you get the money in a lump sum and pay school fees. Then you are safe. So that is the importance of the endowment policy, endowment life insurance policy, whereby you save money for future use. Another one is the medical insurance policy. Medical insurance policy. What is this type of policy? This policy, in this policy, a person pays an amount of money to cover the cost of medical treatment. So medical insurance is whereby an individual pays the premium, and that premium, it covers the medical treatment. To say, right, each and every month you'll be contributing to the insurance company. And when you get sick, that money is given, it is where it is taken to cover your medical treatment. So that is another type of insurance policy. So it works in that way to cover your health, to cover your medical treatment. What is another type of policy? So the other type is the property insurance policy. What is this one? The property insurance policy provides direct compensation to a policyholder whose possessions are damaged, destroyed, or lost as a result of risks specified in the policy. In the property insurance policy, this is the money now that someone invests in the insurance company so that the company provides directly a compensation when damages occur. A house catches fire, a car breaks down, then the insurance policy company comes in and make a compensation. That's why in cars you hear about insurance, insurance, insurance. There are those discs that are pasted on the windscreen of each and every car. Those ones, they are the insurance policies, whereby someone pays that insurance to insure the damage of that car, to say if an accident occurs, then the insurance company comes in to compensate someone for the damage of the property. So examples of property can be vehicles, shops, and household things. So in this insurance policy, property insurance policy, where the examples are the cars that I have mentioned, the shops, when they catch fire, or maybe thieves break into that, or household things, they catch fire or they are damaged due to maybe other things, then that one, it is called the insurance, the property insurance policy. We have tried to discuss all four types of policies. I guess you are following. and you are getting something, you are understanding what the property insurance policy means, the medical one means. So all those policies, I guess you are aware, now you have that knowledge of what they mean. Now, let us look at the importance. What is the importance of me saving money each and every month as premiums for the insurance? What is the importance of the insurance? So the insurance, number one, is important because it offers security against the effects of unforeseen risks. So in other words, it helps people to quickly recover from damage and losses. Imagine there are floods, then the floods, they come, they destroy your house, and you insured your house. It means everything that was destroyed now will be brought back. You'll be compensated for everything because it was an agreement between you and the insurance company. So it offers security against the effects of unforeseen circumstances. It offers security. The second one, it is a form of financial investment. It is a form of financial investment. By investment, we mean keeping for future use. So insurance, it is also like a form of investment for future use, because the money that you put there, the premiums that you pay, you are not losing anything, because in future the money will come back to you. So it is important because it is a form of investment. And thirdly, it reduces uncertainty over the distribution of deceased property, since the policyholder already specifies the distribution while he's alive. So sometimes it happens when one dies. We have seen when people die, then the properties, they are not shared properly. People, they scramble for properties. So when you secure your properties, your things, your money, you stipulate to say, in case I die, the one who is going to get this is this one. This one is this one. You stipulate that one. So in that way, therefore, there is that certainty to say everyone is going to get a shared distribution of the things after one dies. So we have seen that one. Now, the insurance companies sell their policies directly or through a broker. So how does insurance happen? So insurance takes place by the insurance companies. So those insurance companies, they use what we call a broker, or sometimes directly they sell the policies to people to say, all right, come to our company, save with us, and these are the services that we offer. Or sometimes they use what we call a broker. But who is a broker? Who is a broker? A broker is a person who buys and sells goods or assets for others. A broker is like a middleman. So sometimes the insurance companies, they can use a middle person who will be acting like an agent maybe, but he's a broker, a middleman who will be contacting people, and they buy policies on behalf of the company. So he sells on behalf of the company those policies, telling people, sign this contract with us or with this company, they are going to do A, B, C, D to you. Then, in that way, they use to sell their policies. And sometimes they use an agent, which is a company which is in business with the companies, institutions, or individuals who may require insurance advice. The insurance companies, sometimes they can also use the agents. So the agents, they are there, like the institutions, also selling those policies on behalf of insurance policy companies. So that's how the insurance is done or is sold to people. We are saying that number one is direct, number two using a broker, number three using agents. Those are the three ways that's how insurance is sold to people by insurance companies. Now, We have mentioned of the premium. What is the premium? The premium is an amount paid for a contract of insurance. An amount, the money that you contribute, the money that you pay to the insurance company each and every month according to the contract, according to the agreement. That one is called the premium, the monthly contribution to the insurance company. Now, to this far, we have come to the end of this unit, and we were looking at the insurance. I hope by this far you know what an insurance is, the types of insurance, the importance of insurance. You can even explain any type of insurance. Now, before I leave you, here I have the work for you. As usual, this is the exercise for you. So pause a little bit. Pause here. After you pause, then you copy the questions, then you are going to answer the questions properly. Don't check the answers directly, no. The questions are here to test your attention. Were you really following? Can you answer something from what you have heard? So write it in your own best handwriting. You can submit it to your teacher to show him, to see how you have been attempting these things. Now, we are still continuing in the next lesson. We are continuing in unit number 13, that is Social Studies in Standard 8. And in unit 13, we're going to look at budgeting. What is budgeting? Budget. What is a budget? So be there next time as we look at the budgeting. It's a very good unit as well. So until next time, I hope to see you next time, and thank you for your attention.